Hey everyone! There's been a wave of buzz spreading across social media lately, with claims that CATL is planning to acquire a controlling interest in NIO Power. But as always, when stories like these start circulating rapidly online, it's important to dig deeper than the headline and actually understand what's going on behind the scenes. And in this case, I think there's been a serious misunderstanding about what's being reported. So, let's break it all down. The headlines people are seeing seem to suggest that CATL, China's leading battery manufacturer, is gearing up to take over NIO Power, the part of NIO's business that's responsible for their unique battery swapping technology and infrastructure. But when you click into the actual CNF article that sparked this discussion, the details tell a different story. It turns out, CATL isn't aiming to buy NIO Power directly at all. Instead, they're eyeing a larger stake in a separate company involved in managing NIO's battery assets. That company is called Wuhan Weineng Battery Asset Company, also known simply as Weineng or Muradari in some reports. This isn't a new venture. It was actually formed back in 2020 as a joint initiative between NIO, CATL, and two other investment entities. At the time of its founding, each of the four shareholders held an equal 25% stake in the company. Fast forward to today, and things have shifted slightly. NIO currently owns close to 20% of Weineng, and that makes them the single largest shareholder among the group. What's happening now is that CATL is reportedly looking to expand its share and potentially become the majority stakeholder in Weineng. This is a significant development, but again, it's not the same thing as buying NIO Power. And this distinction is crucial. We need to be very clear, Weineng and NIO Power are not the same entity. While both deal with aspects of NIO's energy ecosystem, NIO Power is the company's crown jewel responsible for NIO's entire battery swapping infrastructure and energy services. Weineng, on the other hand, focuses on battery asset management. It essentially oversees battery ownership models and leasing services, making it a different type of business entirely. Now, considering that CATL is the manufacturer behind many of the batteries being used in NIO's vehicles, it makes logical sense that they would want greater oversight or control of Weineng, the entity managing these battery assets. That aligns with their interests. But the idea that CATL would or even could acquire NIO Power is highly unlikely and, frankly, doesn't hold up under scrutiny. Let's think about the broader context for a moment. Just a couple of weeks ago, CATL and NIO made headlines with the announcement of a strategic partnership focused on accelerating battery swap deployment. As part of that deal, CATL committed to investing a massive 2.5 billion RMB, roughly $300 million, into battery swap station initiatives in collaboration with NIO. This is a big commitment that signals strong confidence in NIO's battery swapping vision. Would it make any sense for CATL to invest that much capital into NIO Power, only to turn around and try to acquire it outright? That's not how partnerships like this usually work. If anything, it shows that CATL sees long-term value in working alongside NIO, not owning the whole operation. After all, battery swapping is a key differentiator for NIO. It's one of the core reasons they stand out in a crowded EV market. And this isn't the first time we've seen confusion over NIO Power being up for sale. Remember when rumors started swirling that Xiaomi was interested in acquiring NIO, specifically because of their battery swapping business? That story also didn't pan out. And once again, I'll reiterate, NIO Power is not for sale. It is central to NIO's identity and long-term strategy. In fact, despite other outside investments, NIO continues to hold firm control over NIO Power. After a government-backed fund stepped in to invest, NIO still retained a 90% controlling stake. That shows just how important this part of the business is to them. It's not just another division, it's at the heart of what NIO represents and where the company is going. Now, coming back to CATL's interest in Weineng, it's important to see it for what it is, a move to gain influence over a business that directly involves battery asset management. And from CATL's point of view, that makes a lot of sense. After all, they're the ones manufacturing most, if not all, of the battery packs used by Weineng. so wanting to play a bigger role in managing how those batteries are used and distributed. Totally logical. Weineng plays a significant role in enabling NIO's BOS battery as a service model, where drivers can lease batteries separately from the vehicle itself. This business model is unique to NIO and gives them a competitive edge, especially in regions where EV adoption is still growing. CATL increasing their stake in this specific segment could streamline the supply chain and give them more influence in how these batteries are cycled, maintained, and monetized. And here's another key point that people might have missed. NIO just raised over $500 million, about 4 billion HKD, through a stock offering just 2 weeks ago. This capital infusion strengthens their financial standing and gives them more runway to expand operations. With that kind of cash injection, why would they suddenly feel the need to sell off a core part of their business like NIO Power? The math just doesn't add up. If anything, this fundraising round is a sign of confidence and forward momentum. It tells us that NIO is doubling down on its infrastructure, innovation, and global strategy, not backing away from it. They're not in some desperate situation that would require them to sell off valuable assets. Quite the opposite. So, once again, to clarify for everyone who's been confused by the headlines, CATL is not acquiring NIO Power. What they are looking to do is increase their ownership in Weineng, the battery asset management company that supports NIO's BOS initiative. This move is strategic for CATL, but it doesn't threaten NIO's ownership of their battery swapping infrastructure or their overall energy division. It's also worth repeating that the recent partnership between CATL and NIO around battery swapping has a clearly defined financial ceiling. The maximum CATL will invest under that deal is capped at 2.5 billion RMB. That's a fixed limit, which was explicitly stated in the announcement. It's not an open-ended investment that could lead to a full acquisition of NIO Power. At the end of the day, NIO Power remains a core part of NIO's identity. It's not something they're planning to sell or offload anytime soon. With the continued expansion of their battery swap network and strong support from strategic partners, NIO is clearly focused on maintaining control over this vital piece of their business. So for anyone hearing that CATL is buying NIO Power, no, that's not what's happening. It's a misinterpretation of the actual news. CATL is aiming for a larger piece of Weineng, and that's a very different scenario. Let's stay informed, look past the headlines, and always take the time to understand what's really going on. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.